Hello and welcome to BloombergQuint. You're watching IPO Adda, and my guest today is Mr. BR Preetham, Group CEO of Sansera Engineering, a Bangalore-based automotive component maker, who's coming out with an IPO on September 14th, pricing between 734 to 744, giving it a market cap of roughly 3,823 crores. Mr. Preetham, thank you very much for joining us on BloombergQuint. To begin with, you're coming out with an OFS, which is offer for sale by some of the existing investors and some of the promoter shareholders. Why aren't you going ahead for with a fresh issue, considering that you have debt on your books and you have expansion plans as well?
Good morning, and thank you very much, Sajid, for giving us an opportunity to talk to Bloomberg. Yes, this our investors, TRG, who have been invested in with us since 2013. They are financial investors, and they have been looking at some exit, and they are in fact divesting less than 50% of their holding, and a very little divestment is happening from our promoters. As far as the company is concerned, we are quite confident of meeting our capex requirement through our internal accruals, and if there is a requirement, we can always raise debt, as our debt equity is quite healthy. The ratios are quite healthy, so we do not require any equity into the company as of now.
So, let me take touch base with you on the COVID issue, right? You had COVID in the last financial year, which has impacted some bit of your production. What was the expected or estimated losses because of COVID led shutdowns for some of your plants?
If we are talking about the last financial year, yes, the last financial year, the quarter one was almost a full washout. And if you look at our, despite that, we have had a growth of 5% annually year on year compared to the previous year. But if we had done in a normal course of business, it would have been in line with the last three quarters which were reported. So though we had a first quarter washout, but we recovered very well in the last three quarters, and then we were able to post a growth of about 5% year on year.
Okay, you are in an automotive sector which is facing a lot of issues with respect to chip shortages, semiconductor issues. Companies have taken to production shutdowns because they are not able to get supply chain in properly. Is there going to be an impact on you as well because of that?
Yes, there is a global impact of the chip as of today, but we have not yet felt the effect of it because we are very well diversified across non-auto and auto sectors. Also, geographically, our business is well diversified. We have been with almost all the OEMs, both in passenger vehicle and in two-wheelers. So any small variation in the business with one or two customers as of now has not had a big impact on our revenues. But going forward, if this is going to continue, which is not our expectation, we expect that things should get normalized much faster. So we are expecting that we should hold on to our plans.
Okay, the reason I'm asking is that the estimate is that by September end, you may find some kind of stability in the chip supply chain, which is there, especially from some of the countries like Malaysia and others, where most of the Indian OEMs source their semiconductors from. If that is a situation, have you seen any kind of slowdown in sourcing by the OEMs in the second quarter?
Yes, last month as well as this month, there has been a small change in the numbers with some of the customers. So there has been a slight reduction in their offtake, but majority of the customers, both in global and domestic, have held on to the schedules. So there is a small impact.
Okay, nearly 50% of your revenues come from two-wheeler segment. That's my understanding. With 40% coming from motorcycles and 10% from scooters. How have you seen the two-wheeler segment performing? I'm asking this because it was one of the fastest growing segment pre-COVID, and we are yet to reach the same volumes of two-wheelers. even after lockdown have been lifted. People have started buying, but the two-wheeler sales have not reached the pre-COVID levels. So my question to you is that since you that's the biggest segment for you, how have you been seeing the kind of demand for auto components from OEMs?
Yes, in the beginning of the year, we had estimated about, as the market had predicted about, we had taken a normal growth of about 12% for the two-wheeler segment. But looking at, impact of the second wave of COVID and a small impact of chip making, we expect that the normal growth of the two-wheelers would be less than 10%. But Sansera is well positioned as we are also started working with the new age EV startups as well as the OEMs who are getting into the EV, and that is a new business addition. We are very excited about it. Second thing is that we have also been beneficial of China Plus policy, where one of the Indian OEMs have actually given us a significant amount of order, which they were actually sourcing from China. So this should help us to maintain our growth profile, though the industry is not fully recovered.
Uh, uh, what kind of response have you got from other OEMs on the China Plus One policy? Because though one of the Indian OEMs may have come to you, are you seeing such queries or demand coming from global OEMs as well?
This is across sectors quite visible. We have also been getting such inquiries and orders from not only from auto sector but even from the non-auto sector. For example, we have got a big North American bicycle performance bicycle manufacturers who are sourcing kit from China have placed order for very critical both components. We are also in discussion with them for some aluminum forged components as well, which are used in extensively in this segment. So it's not only from auto OEMs in this, which is quite evident for us, but also from the non-auto OEM that this trend is more and more visible now.
One of the largest customers for you is Bajaj Auto. Uh, what kind of outlook you have from the Bajaj end, considering that they have also entered the electric two-wheeler segment? Is it going to sustain the kind of revenue contribution, or are you going to see a much bigger as EV plays a bigger role for them?
Uh, Bajaj has been our biggest customers. They have been one of our most important customers, and we are very proud of our association with Bajaj. We have been there with them in all their new product development, and we are quite confident that the journey into electrification, we will be with them. And we are very, though our share of business in our revenue from Bajaj for Bajaj has significantly come down, our business with Bajaj has every year has grown. So we are very, very bullish on Bajaj, both in their export market sales in domestic as well as their new EV introduction as well.
If I'm not wrong, your products are agnostic to whether it's EV or internal combustion engine. Do you see a significant boost coming to you because of companies moving to EV separately? Are you going to put up new products in that value chain for your OEMs?
See, our diversification has already started. We have been diversifying into technology agnostic components, keeping in mind the uncertainty about what technology is going to finally get established. So our focus has been on technology agnostic components and also on lightweighting components. We are also setting up a greenfield facility for manufacturing of components which are for EV as well as hybrid components. But when I say this, I will also have to say that our existing capacities are also fully fungible. So if the electrification happens much faster, we will be able to cater to whatever pace of electrification that happens. As our facilities, we have got one of the most flexible manufacturing systems, because the machineries that we use most of them are designed and manufactured from us. So they are modular and fungible. So this journey into electrification, we are quite excited about it, because we can adapt to the pace of it, whatever pace the industry takes.
On the capex side, last couple of years you've been investing over 100 odd crores, on capex. How do you see that going forward in the next couple of years? Is it going to be specific to new technologies in particular, or expanding your existing plants with brownfield capacities?
Yes, Sajid, as we are into very precision engineered components and involving very critical forging, machining, heat treatment, so we are a fully integrated facility. So our captive requirements are quite high. We have also got a very aggressive growth plan. So as declared in the DRHP, we are looking at about investing 250 crores of capex in this year. In the the distribution of this capex is about 25% of the capex would be towards our core business. About 10 to 15% of our capex would go into technology upgradation and maintenance, and about 55 to 60% of our capex would be for new age components, both for electric, hybrid, aluminum forged components, and also defense and aerospace as well.
You're setting up a new plant in Bangalore for aerospace and defense. Uh, Currently, that contributes roughly 3% or 4% of your revenues. How do you see this segment growing for you?
Aerospace journey has been very good for us, though the last couple of years, due to the pandemic, the industry has taken a hit, but we are very bullish on that. We are moving up the value chain in the aerospace. Now with the defense sector opening up for private participation, we have been seeing a lot of inflow from and interest from defense as well. So looking at our order book and the interest and the potential of this sector, we are setting up a new greenfield facility, which is almost about 3 times the size of our facility, which will host both commercial as well as defense aerospace projects. We are very bullish on this sector.
How do you plan to finance this expansion plan? Because 250 crores, what kind of cash flows are you expecting on a yearly basis?
As per our projections, this capex can be fully funded by our internal accruals, and if any additional fund is required, as we have a very healthy debt equity ratio, we can always leverage and take some debt. But as of now, we will fund it fully from our internal accruals.
I just want to get a clarification on the existing shareholders. There's an agreement with the promoters which states that they will get 30% of the incremental profits after the IRR recovered from the sale of shares. Is this pricing fully covers the IRR requirement, and whether promoters will be able to get that kind of profit after that?
No, this has all been already settled. The CCPS is fully converted, and there is no such agreement that is in existing now. It's all the agreements have already been closed.
And what is the timeline for the full exit of the investors?
Our investors have been with us since 2013. They are quite happy. So they are only divesting less than 50% of their holding. And when they are going to exit, I don't think I can answer on their behalf.
I'm asking that because they have a board seat as well, as long as they have 5% stake in the company. So that's the reason I'm asking. Is
they have been very, very supportive. They have contributed to our growth. We are very happy with their association, and they still hold significant portion. They will continue to contribute till they are on board.
I want to come back to the entire issue of passenger cars as well, because that's a segment which contributes nearly a fourth of your revenues. How are you seeing that segment growing, considering that there's a lot of headwind coming in that segment from chip issues, supply chain, demand? Do you see enough of demand coming from that segment in the current or in the next couple of months?
Passenger vehicle segment is going to be a very, very strong growth engine for us, because as you are aware, these are our core business, where connecting rod is one of our core components. This was always being manufactured mostly by the OEMs in-house, in all the last few decades. But as the OEMs have moved away from component manufacturing and focusing more on design, assembly and branding, there is more and more outsourcing happening on all their new models. This is a trend very evident both on the global as well as on the local front. So we have been one of the beneficiaries of this, as explained in the RHP, where we are now one among the top 10 suppliers for the connecting rods globally for both passenger vehicle and the commercial vehicle. And we are looking at a very strong growth coming from passenger vehicle segment in our core business, as the capacities are not getting expanded in line with the demand that is happening. So as we are also a financially prudent company, we have been able to increase our share of business and also get new programs as well from both global as well as domestic customers. So we look at passenger vehicle as one of our very strong growth engines.
Finally there is a liability which is there on us because of some of the performance link thing from a global supplier, and it seems the total liability could go as high as 35 odd crores, which and you've given provisions of nearly 7 crores odd. What is the current status of it, and by when do you expect that this is expected to be resolved? Because I think you are in a settlement talks with them on this issue.
Um, while I don't want to comment too much about it, as the things are under discussion with this thing, but we are very confident that this is not. Company is very confident of our stand on this. We are, in our opinion, this is not because of our product. So we are in discussion with them, and hopefully we will resolve this in a very short time.
Mr. Preetham, it was a pleasure talking to you on BloombergQuint. The Sansera Engineering IPO opens on 7th of September 14th and closes on September 16th with the price band of 734 to 744. Thank you very much for joining us on Bloomberg.
Thank you very much, Sajid, for having me on this show. Thank you very much.